Welcome to Traders Expo 2017 here in New York City. I'm Matt McCall. Thanks for joining me. Joined here today by Dan Gramza. He's the president of Gramza Capital Management. Thanks for joining us again, Dan.
My pleasure.
All right, so let's talk a little bit about the commodities market here. Crude's interesting to me because we've been pretty much in a trading range for quite some time. I've interviewed a few people today, conflicting views, some bullish, some bearish, some just, hey, I don't know what the heck it's going to do. Where do you look at crude right now, near the upper end of the range?
I have to tell you, between $50 and $55, I think it's where it should be, and it's on the high end. There's a few things we need to think about when it comes to crude oil. Overall, I'm bearish on it near term. Long term, could it hold in this range? I think so. If you look at Saudi Arabia, what do they say? They say, well, we'd like it around $60 a barrel, right? That's their magic number. I don't see it, maybe we could touch it. I don't see it being maintained because here's the thing, Matt. Let's look at the supply. Let's just look at basic issues. They said, okay, we're going to cut production. They want 1.2 million barrels per day. They're about 90% towards that objective. But I don't have confidence in that. You know, it's 1 month they've been doing it. And everybody's saying, oh my God, look, they're doing it. Well, where are we going to be in 6 months when they're supposed to finish it? If I'm Venezuela and I have a problem with my economy, am I going to produce more crude oil? Probably so. So I don't have faith in them holding these production limits. That's one issue. The second issue is our shale production is increasing. Saudi Arabia says, oh, they're not going to be able to do much. They're doing a lot. We have shale production that's profitable at $30 a barrel. Not everybody, but that's still there. So right now at 50, we're seeing rig counts going up. We're seeing that production increasing. So we are offsetting some of that. We're also sending crude oil offshore. I think China just bought 2 million barrels of heavy crude from us. So we're seeing that aspect. But the one other thing, we still have supply that's at all-time highs. If you look at the EIA statistics, and they started keeping those, I think, in 82, if I remember correctly, it's the highest that's ever been on record. So we have a lot of production to go through yet. There's 40 tankers sitting off in Rotterdam on the water, not on shore, but some of that people bought at $30 a barrel. There's some trading firms I deal with that they bought that for a long-term investment. But the fact is, that's still supply out there. You know,
and at the end of the day, Dan, supply and demand drives price, right? I mean, over the time.
It's exactly right, Matt. And not only there, we have the dollar that comes into play.
Yeah.
If we have a weaker dollar, crude oil prices typically go up. Because if I'm a refiner, if I'm a producer, I get paid in dollars. Yeah. So therefore, when I go to the bank, if the dollar's worth less, I get less. Yeah. So I want crude oil prices to go up. And typically, we see that relationship. So I think as you and I look at crude oil long term, we want to pay attention to the strength of the U.S. dollar, and that supply issue is still hanging out there. So I don't see us changing much for at least 6 to 9 months. I think we're going to be in the sideways band or lower.
That makes perfect sense to me. So speaking of the U.S. dollar and relationship to that, obviously gold has pretty much a direct relationship to the greenback as well. How do you see gold playing out?
I think gold's going to have a tough time rallying. I know there's a lot of built-up demand and expectation, right, for gold.
Doomsdayers pushing gold, right?
Exactly.
But they're always pushing it, but yeah.
Well, that's true. Yeah. That's true. It's part of the mantra.
Yeah.
But from my point of view on gold, I don't think we have the parameters in place to stimulate that for long-term growth. Do we have inflation? Do we have uncertainty in the marketplace? You know, is the dollar in trouble? We're not seeing those typical warning signs. Now, could we have political unrest? Could we have something in some other part of the world that stimulates global concern that would definitely drive gold prices higher? Sure. That's always a potential.
Short term, though. That's, not sustainable.
You know, Matt, I don't see it.
Yeah.
I'm long some gold, but I still think we should be cautious at these levels. I have a hard time buying it where it is right now.
Either you're really smart or you're in trouble, because I agree with everything you said, Dan. I don't know what it is yet. Dan Gramza from Gramza Capital Management. He's the president. Thank you so much for joining us, Dan.
Good to be with you.
Thank you.